This is your LMAX Exchange technical update for Friday, August 19th, 2016. Euro dollar. So at this point, the euro has accelerated since breaking above the 100-day moving average and is now closing in on key internal resistance, which comes in at 114.28. That's the high that we saw back on the 24th of June. But if you look at the chart over the past several months, you can see that there's a lot of good internal resistance that comes in the 114s, and we saw that back in April. So if we do see a rally up towards 114.28 to retest that June 24th high, it doesn't mean that we'll continue to see gains, and we could just as easily see the market stall out into the zone up here. If, however, we see a break and close above 14.28, that would do a good job of maybe opening the door for a retest of the 2016 high further up at 116.17. So the focus right now over the coming sessions is for potential retest of 14.28, but then looking for the market to stall out as it has up towards these levels. Sterling dollar. So cable has seen a nice correction over the past few days, with the market stalling out just shy of that plus 30-year low from July and moving back above 130. At this point, we could see the market extend back towards the range highs, which come in around 133.72, and only a break though back above that level would take the immediate pressure off the downside. If the market holds below 133.72 on a close basis, and while it's below there, the pressure overall remains on the downside, with this classified as nothing more than a minor correction within a bearish consolidation and larger downtrend. So again, if we do see rallies over the coming sessions, they're expected to stall out into the 133s in favor of a bearish resumption. Dollar yen. So dollar yen continues to be confined to a very well-defined downtrend, and the market is now trying to establish back below 100 with a retest at that recent 2016 low and multi-month low at 98.99 in sight. A break below that level will do a good job of opening the door for an acceleration back towards next key psychological barriers at 95. At this point, it would take a break back above 102.65 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss isn't really interesting right now. The market's been chopping around over the past several days. We need to see a break above 109.45 or back below 107.78 for clearer directional insight. Aussie dollar. So Aussie has traded up recently to 77.58, just shy of that 2016 peak that was seen back in April of 2016 at 78.35. But it looks like the market could be looking to stall out and putting in a lower top up here in favor of a broader underlying bearish resumption. We would, however, need to see a break and close back below recent support at 76.09 to confirm and strengthen this outlook. At this point, though, if we do see a pushback above 77.58, it will open a direct retest of the 2016 high. Dollar CAD. So dollar CAD has seen some intense pullbacks over the past several days, with the market now closing in on some critical support at 126.55. Ideally, though, the market has been putting in a major base and should find some support ahead of 126.55 in favor of a higher low and fresh upside extension back above those recent highs that we saw at 32.54. Several days back, the market was looking highly constructive after taking out some critical resistance, some previous range and base resistance, which came in at 31.89, and that break opened the door for a move to 32.54 and set the stage for a significant upside towards 135, 140 further up. And so this latest pullback is a bit of a delay, but doesn't compromise the constructive outlook while the market holds above 126.55. Kiwi dollar. So Kiwi has been trading up towards 2016 highs in recent trade after last week putting in that 2016 high at 73.41. But it seems the market continues to stall out up towards this level, and we could see another stalling out over the coming sessions. But the market would need to establish back below 71.65 to strengthen this outlook and accelerate declines. Inability will still keep the pressure on the top side for a potential push above that 2016 peak at 73.41. SPX 500. So the S&P 500 has recently put in a record high at just shy of 2,200, and it looks like the market could be starting to show signs of exhaustion. But at this point, while it holds above certainly the low that we saw in Wednesday trade, that low, which came in around 21.68, the pressure does remain on the top side, and there is risk for fresh record highs through 2200. But if we establish back below that 21.68 area low from this week, it will expose 21.47, below which would signal a major top and open the door for a significant downside acceleration. Gold. So gold continues to show signs of a major higher low here at 1310 ahead of the next upside extension beyond the 2016 peak at 1375 and towards 1450 further up. At this point, only back below 1310 would really compromise this outlook as the market continues to show signs of this major structural shift over the past several months that points to additional upside in gold.